All right, folks. Tim Davis here again. I'm up early, took a nap, and went to go pick my son up tonight for work to get gas again, fill my car, my tank up again. And I noticed that about 7 days ago, I paid 45 cents less than what I paid tonight in gas. That is a big jump in over a week. About a week ago, it took me about $49 to fill my little small car up. I have a Hyundai Elantra. And then went to go fill up tonight. It cost roughly 58 bucks. Just about a week later. So that drew my attention to take a deeper look at crude oil. So that's what I want to do real quick. Just take a deeper look at crude oil to show you guys what's setting up in the crude oil space, which also is another sign of that inflation is definitely not tamped down yet. So don't believe a lot of what you're probably hearing in the news about uh, no recession and everything's is starting to come back down or get back to normal. It's a whole bunch of bogus to me. But look at crude oil. This is a 4-hour chart I'm taking a look at now. And what I want to point out is that in general, overall, looking at this 4-hour chart, you can see, just looking at the moving average line. This is my blue line. It's moving average. Even on the 4-hour chart, we can see as crude oil prices, go up and down, the overall movement of this 50-day moving average line has been snaking higher. And nothing goes up in a straight line, but if we track the movement of this, of my 50-day moving average, it's pretty much been going higher, snaking higher and higher and higher, even on this 4-hour chart. So that's something to to keep in mind. As the moving averages continue to march higher, prices will follow. With that said, I want to point out a pattern that I've been spotting in crude oil, and I want to show you how it looks on the 4-hour chart. And I'm also show you the same type of setup that's starting to occur in a longer term monthly chart. So if I was to do a trend line from this peak to this peak here, what you pretty much got, and draw a trend line from here to here. And then what happened? We went up to that point, and then what happened? Crude oil got a slight pullback in the near term, marched up to this level, pulled back, and look what it did. And some folks can see what's happening here. Then we pull back again. Now, for those folks who study and watch patterns, this is almost a perfect setup of a cup and handle pattern. You move up back to that level of resistance again, have a slight pullback, and then prices find a way to march higher. Perfect setup for a cup and handle pattern in an upward trend until this trend changes and start to go down. This cup and handle pattern could result at the could end up resulting of higher prices in the near term. So after this slight pullback from around this 119 level that we experienced at the beginning of June, we pulled all the way back down to about 110, and prices rallied back up to right there 119 again, and then we started to pull back again. It's like we're ready to launch out of that 119 area. So that's what we look like in the near term. If we look at and keep that cup and handle pattern in mind. Now, if I switch this to a daily chart, get rid of that, get rid of that. Now, so near short term, we see that it's forming a cup and handle pattern. Longer term, well, not even longer term, we're even in a near term, because this is still near term to me, but prices reached peaked at around 129, or should I say close to 130, back around beginning the end of February, beginning of March. Then we pull back down. Guess where to find support right at that 20-day, that 50-day moving average. So even on a longer term daily chart, that 50-day moving average, as you can see, has been a strong area of support, showing you that overall the market or crude oil market has been trending higher for quite some time. We were as low as 66 bucks, folks, back in December, and since then, look at the 50-day moving average. It has been on a steady climb higher since December. Okay, even when prices back in around February the 21st took a big jump off of that 50-day moving average. For those who've been following me for a while, I always tell you that the 50-day, these moving averages act as a magnet. So when we took that big jump off of the moving average, but the moving average continued its climb higher, but steadily, price took that big jump. It was only but a matter of time for price actually to resort right back to that 50-day moving average, which is what it did. But it did not break below it. What did it do? It continued its climb higher. So that moving average it was a clear indication that even though prices have pulled back from that 129 back down to that moving average, the longer term move upward was not over. Just a temporary pullback because we had a big jump off of that moving average. Price pulled right back to the moving average, jumped up again, pulled right back to the moving average, and then continued a steady climb higher. So every time we had those big moves off of that moving average, but the moving average doesn't move, that's telling me that longer term, this trend is still intact. Now, so the next possible target, once we come out of this short-term cup and handle pattern that's shown on a 4-hour chart, next target in mind is more than likely that $29 at $129 price target on crude. And once we get to that level, since that appears to be a strong level of resistance, more than likely what you could see is a possible pullback from that level. Now, let me draw your attention to a longer term chart. And I'm even go even longer than this. Let's take a look at a 20-year chart. I'm gonna show you the setup. No, let's go back to a weekly chart. So what could be happening, I'm show you a weekly chart first, is the same type of scenario that we've seen on the 4-hour chart. Meaning another setup for a potential cup and handle pattern. Price action traded back down to this big moving average back in November, and what did we do? Price action started to march up. Notice how we are quite a bit of ways now off of the 50-day moving average. So more than likely, I do believe we're probably going to have a check back to this 50-day, but not before we test this 129. That's just my belief. Went up to the area, and what happened? To 129, to that area of resistance. Price action pulled back, but only pulled back to set up a rounding pattern, just like the one we've seen in the 4-hour chart, folks. See that? So what could we be possibly expecting? A possible pullback here. Once we get between that 120 to 129 level, I think we're probably going to run into some resistance up here around this 129 eventually. And then, but look at the moving average. Moving average is still in an uptrend. Okay. But I do think we'll possibly be ready to challenge this 129. And what we could see after that, you can see the same type of setup that we've seen in our 4-hour chart. Possibly form a cup and handle. We could possibly run up towards that 129 and possibly see a pullback. And that may start to happen maybe the end of this month or maybe the beginning of July, but I think that's what we are possibly setting up for. Okay, a possible run up towards that 129 and then a possible pullback as the moving average continues to climb higher. Okay, and you can also start to see a hinge in the wins percentage. Like it's starting to starting to turn around and trend lower, but it's still possible more room to the upside in the near term to see crude possibly head towards that 129. If we hit that 129, I don't think we're going to blow through it the first time, but anything is possible. I think we're probably more than likely hit that ceiling, possibly pull back, and somewhere in here, maybe even pull back even sooner than that, but somewhere in here, we'll possibly try to have possibly see some type of pullback back down to this trend line. So I drew these two trend lines because they are areas of support resistance. Once we pass the first trend line, previous resistance becomes support. So more than likely, we can see a pullback to this level, which is just below 119. So that's around 115. So that's a possibility over the next couple of weeks. Maybe a continuation, a continuing pattern higher in the near term, and possibly a pullback to complete this cup and handle pattern. Then if we do get that pullback between 120 to 129, I think the next move, if we do pull back here, then start to rally, the next move, folks, we are probably going to blow through that 129. So by the end of the summer, maybe by the end of the summer, beginning of September, sometime around there, we could start to see much higher crude prices. So keep that in mind. But I do think we are setting up for a cup and handle pattern on our monthly chart of crude. Sorry, on our weekly chart of crude. I think we are setting up for a cup and handle pattern. So we could see a little bit more move higher for a short-term blow off top, maybe challenge at 129, and then possible pullback, and then a possible bigger run higher out of this, away from that 129 area. So I wanted to point that out, show you guys what these cup and handle panels look like, show you what to look for. And then ultimately, what this year is out, folks, ultimately, I think we are definitely, look at this 20-year chart. I think we're setting up for a breakout above that 147. That is my personal opinion. And I think if we do get to that point, we could possibly start to really see some bigger moves in crude. Now, I want to point out something too. On this monthly chart, if you look down at the bottom of my screen where RSI is, the monthly chart, we're starting to head into overbought territory. When we did that back in 2008, you see what happened. We got a sell-off, okay? Now, right now, RSI on a monthly chart is showing at 75. In 2008, we went a little bit higher than that. So I said it to say we could definitely be heading up once we get a short-term pullback here, probably soon. We could definitely be heading up to challenge that 147. If we blow through that 147, I don't think we're going to go. Personally, I don't think we will go much higher. Don't think we will go much higher than that. And within that time frame, I do think there's a possibility that we can blow through that eventually. I think we could have the same type of setup, test this 147, and then another cup and handle type pattern, pull back, and then maybe another launch higher. That is what I believe could happen. That may take a year from now. That may take over a year for this to play out, or less. We just don't know. We got to wait and see. Right now, on a monthly chart, RSI is definitely heading into and is above the 70 level of the RSI, which is considered the overbought territory. So does not mean we can't go any higher. This means that we are currently in an overbought territory, and we could see short-term high prices and then a possible pullback. So I just wanted to point that out, show you guys where crude is heading. Do expect to see more higher prices in crude, which means more higher prices at the gas pump, folks. I mean, these gas prices could be, as high on the East Coast zone as they are on the West Coast, and the West Coast is just going to continue to go much higher. All right, folks, hopefully this is some information that you can use. Prepare yourself accordingly. Take advantage of whatever moves you can to try to continue to set your portfolio up in the right place where you can offset some of this inflation woes by increasing the gains in your portfolio. Have a great night. Well, great morning, should I say.